Property prices are slowly creeping up and are getting out of people's affordability range. But in this video, I'm going to be going over the suburbs where prices are still lower than they were a year ago, and you may want to put them on your radar as there may be more price declines coming soon. As we all know, the property market isn't just one market, so if you see headlines saying property prices are booming, you may be in an area where they still are declining. So sit back, relax, and let's get into it. And of course, if this video brings you value, please smash the like button for the holy YouTube algorithm. It really helps out the channel a lot. And comment your thoughts below. What areas do you think are going to continue to decline in 2021? And subscribe for latest property market and economic news here in Australia. So did you guess it? Apartment prices in pockets of Sydney and Melbourne are significantly lower than a year ago, creating new opportunities for first home buyers to get their foot on the property ladder. And let me know, if you're a first home buyer, would you want to be buying one of these apartments when we've seen there's been so much poor construction lately? A lot of these apartments are tiny. Imagine being locked down here in Victoria and being stuck in a one bedroom or a studio apartment. It definitely would be a nightmare. Not only this, but they're continuing to add to the supply to the market when there's low immigration, so there could be some more downward pressure on apartments in the near future. So it says here, the federal government has provided a boost for first home buyers, confirming to this that it would make a further 10,000 places available in its highly popular first home loan deposit scheme from July 1. And I find this is something pretty funny what the government do. They always make it limited time only, they have a cut-off date, or they only have limited spots to create FOMO. So people rush in, they don't make educated decisions, and they go ahead and take it up. And hey, some first home buyers that took it up a couple of years ago, in some areas they may be doing pretty good, but for apartments, unfortunately, they could be in negative equity. So under this scheme, buyers can put down just a 5% deposit on a property but still avoid expensive lenders' mortgage insurance. This insurance is normally required with a deposit of less than 20%, which can run to tens of thousands of dollars. And that's exactly right. If you're borrowing $500,000 to $700,000, lenders' mortgage insurance could be $20,000, $30,000. So they are definitely saving a lot of money in that regard, but it is more risk. And for myself, I definitely wouldn't want to be buying one of these apartments. While property prices are generally on the rise again, some of the best options for first timers are among inner city Melbourne units and apartments whose prices are normally lower than in Sydney. And that's true, Melbourne is lower than Sydney. I've seen some apartments for around $300,000 in Melbourne. But again, due to falling rents, a lot of these apartments are owned by investors. I do expect them to continue to fall. And we've seen some suburbs like Carlton where apartment prices have fallen over 30%. However, even the harbour city has a sprinkling of suburbs where prices are lower than a year ago. Property researcher CoreLogic has identified 11 suburbs in Sydney and 10 in Melbourne where unit prices have fallen beneath the FHLDS cap for existing properties of $700,000 Sydney and $600,000 in Melbourne. For new homes, the caps are $950,000 in Sydney and $850,000 in Melbourne. There are also income tests to be eligible for the scheme. And another thing with these schemes, they start off lower, but what this does is it actually makes housing more unaffordable for first home buyers. So they pitch it, we're here to help the little guy, we're here to help out first home buyers, but really, who do you think benefits the most from these schemes? It's the developers building these big apartment buildings. It's investors that hold multiple properties, because even if you hold one property, you own your own home and it goes up $100,000, the only way you can actually get that equity is by refinancing and getting in more debt or selling your property, and then you've got to pay a bunch of fees, and then you've got to pay stamp duty when you move into your next property. And not to mention, it does help governments as well with stamp duty revenues, because the more expensive the property, the more you have to pay in stamp duty. So the median value of units in inner Melbourne have dipped by an average of $33,000 between the onset of the pandemic and January this year, the CoreLogic figures show. Prices in South Melbourne have fallen by up to $50,000, and other inner city Melbourne areas where prices were above the $600,000 for FHOD threshold for existing dwellers in March, but have slipped below the cap by January, includes Brunswick, Docklands and St Kilda East. So what do you guys think about those areas? Would you be buying there? Eliza Owen, Head of Research Australia at CoreLogic, says inner Melbourne prices and rents have been among the hardest hit since the onset of the pandemic. It's an area that is highly exposed to demand from overseas migrants and international students, as well as those employed in the hard-hit tourism, hospitality, and arts industries. And that's exactly right, and there's really no sign yet that these are going to be coming back soon. We've just entered another 5-day lockdown here in Victoria. That's why I'm pumping out the content. Haven't really got much else to do. And these industries are still struggling, and they haven't really given us a set date or a hard date when the borders are going to reopen. There's still so much uncertainty. Same with the arts. So it's still not looking really good for these industries in this area in Melbourne. Sydney suburbs of Arncliffe, Hurstville, Ashfield and Strathfield all have unit prices that were above the 700,000 threshold in March last year, but have fallen below the cap by January. And as we can see here, this is a list of the suburbs, what they were in March, what they are as of January, and they're changed now, and who knows, they may have fallen even lower since January. Since the start of the first home buyer deposit scheme a little over a year ago, 20,000 places will have been offered by middle of this year for purchases of existing and new homes. But what I am seeing with a lot of first home buyers is they're choosing to buy new builds, and that's again increasing supply when we don't have the immigration coming in right now. Now I do expect once the borders do reopen, they're going to pump through as many people as they can to get that GDP up and fill up those vacant properties. The government has added a further 10,000 places in November, but only for those purchasing or building a new home. Last week the government said it would reissue 1,800 places that were unused for the first tranche of the scheme. These are available for the purchase of new or existing homes until the middle of this year. So again, we just see them slowly increasing it. I'm sure they'll just continue to extend these temporary programs. A spokesperson for Housing Minister Michael Sukkar confirmed that an extra 10,000 places in the scheme for new and existing properties would be added for a further 12 months from July 1. However, with house price forecasts to rise sharply throughout 2021, market watchers are still expecting first home buyer activity to decline. So something I've been speculating on why there has been such a huge amount of demand for first home buyers is because what I think is a lot of people or a lot of couples did last year was they withdraw 20k each of their super, so all of a sudden they've got $40,000 for a deposit for a home of up to $700,000 to $800,000 that they wouldn't have been able to save otherwise because the cost of living is rising so much. So that's really created a spike in first home buyer activity, but this may die down as those people purchase and other people don't have access to that capital. Andrew Wilson says the dream run of the past year for first home buyers is about to come to an end. We have likely reached the pinnacle of affordability for first home buyers, and as prices start to rise, fewer will enter the market, Dr. Wilson predicts. Sally Tyndall, Research Director at Rate City, says record low interest rates are fueling a boom in home lending together with government incentives and support packages. And I agree, so what this created was a small window there where housing became a bit more affordable in Melbourne and Sydney as prices dropped, interest rates dropped so people could borrow more, and there was huge amounts of handouts by the government, so all of a sudden they were cashed up, and so that gave a 12 to 24 month window where people can finally get into the property market. But as more people get in and prices go out, it's just going to make it harder for the next round of first home buyers. There is a fear of missing out, particularly among first home buyers who are now seeing property prices tick up, she said. While first home buyers have continued their surge onto the property scene, investors are starting to take a comeback, adding more competition in an already crowded market where in many locations stock is in short supply. And that's something I've seen. If you look at the lending data, we are seeing an uptick in investors where now they're starting to see the gains, they're starting to see more certainty, so investors are starting to jump in as well, which is creating more demand. And in some suburbs, not the inner city suburbs where there's lots of apartments, but in lots of regional markets or in coastal suburbs, there is a lot of demand and there's not much supply. And so people are paying whatever price they can to secure that property. The Australian Bureau of Statistics reports that while lending is still well below the pre-pandemic levels, investors are returning with a value of investor loans seasonally adjusted increasing by 8.2% in December last year. So that is a big uptick in investors. And also what I'm seeing is the rates between investor loans and owner-occupier loans are starting to come closer together. Before, there was a big premium in interest for investors. They had to pay a much higher interest rate, but now banks are dropping their interest rates for investor loans. I even saw a 1-year fixed rate, I think it was by loans.com.au, where they're offering an investor loan of 1.99% fixed. That's definitely lower, and that's just creating more incentive for people to jump in for property as an investment. So what do you think? And what other suburbs do you know that are lower than a year ago, or that are still got some low prices and maybe first home buyers can get into in these hard markets? And also, what do you think? Do you think that first home buyers are going to drop off? Do you think this was a small window there and housing's going to get more unaffordable? And what are your thoughts for house prices in 2021? And for all my loyal viewers and subscribers still watching, you're awesome. And of course, if you haven't already, please tap that like button for the holy YouTube algorithm. It really helps out the channel a lot. Subscribe, I'll keep you all up to date on the latest property market news here in Australia. And of course, I'll see you all in the next video.